If we're right on how quickly those are going to evolve and how those S-curves are going to be feeding S-curves, then the traditional world order is going to be disturbed. It's been a bloodbath, and it really started February a year ago. It's been an entire year as the world began to go back to work with vaccinations. Fears of inflation and interest rates picked up, and the first victims, and it continues to this day, that were the genomics names. And the reason is the idea that interest rates go up and reduce the present value of future cash flows, because so many genomics companies are unprofitable. They're pre-profits, as we say, sometimes pre-revenues. We do have to go out pretty far, and we're very reliant on that discount factor, which is the interest rate. And so we've seen many stocks cut to 20% of where they were at their peak. Which, of course, from our point of view, has created bargain basement pricing. What has happened since the tech and telecom bust and the 08-09 meltdown is this risk aversion and this very short-term focus, which has really roped analysts and portfolio managers to their benchmarks, the benchmarks against which they're measured. I would abolish those. That would be the first thing I would do, because they are backwards looking. The companies that are at the top of those indexes are there because of past successes. And if we're right, and the world is going to be disrupted, not only in the genomic revolution, but also with adaptive robotics, energy storage, blockchain technology. I mentioned artificial intelligence. It's involved in all of those, if not destroyed in many ways. The other side of disruptive innovation is creative destruction. And so looking to the past, tried is true, is going to be a failing strategy. And we see those indexes being populated increasingly by value traps, stocks that are cheap for a reason. They're going to be disintermediated, or the companies are going to be disintermediated or disrupted. So I think right now we're beginning to see true visionary leaders stand up to short-term shareholders. We've certainly seen that we saw it with Amazon. That was one of the first proof of concepts. Remember, Amazon was supposed to go bankrupt in the day. We've seen it with Tesla, the same thing. Tesla was supposed to go bankrupt, but these companies these management teams had big ideas, and they were not going to let short-term shareholders hold them hostage. And so they winnowed their holder base to long-term oriented shareholders. And, we often have companies coming to us saying, what would it take to get into your portfolio? Which is a wonderful question for us. We know what we're looking for. And it is because we are the closest you'll find to a venture capital fund in the public equity markets. We have a very long-term point of view. And I think the companies that are serious about investing aggressively now to capitalize on these opportunities, we want them to forego short-term profitability in order to move into lead positions in these winner-take-most worlds. So I don't think we're going to change mindsets, but we need more visionaries who are willing to stand up to short-term shareholders, because guess what? Truth will win out. And those who are playing the old game will lose, and those of us who are playing the long game will win. Well, there are a couple of pieces of advice. When times are good, make sure you do go to the market regularly, but don't stretch too much. What we're seeing right now, especially in the private markets, is, and given how bad the public markets have been, that is starting to seep into the private markets. And so talent is reassessing, wait a minute, do I want to join this private company, which is just now going through down rounds, or do I want to join a public company? So you have to think very carefully, public company that has already been hammered. So you need to think very carefully at this time about talent. And of course, during the good times, fund away, because the innovation taking place today is so powerful in terms of the growth trajectories that we see ahead as we see, innovation platforms and technologies converge, that only those with enough capital and who are agile in this very fast-moving world are going to survive. And I also think making sure that artificial intelligence is a part of your strategy, because data is the name of the game here. To the extent you're anywhere in and around data, make sure you can harness it. So that's for the private markets. If you want to scale and want to do it rapidly, again, as times get a little better, I would think about going public.
Small ebook, big impact, the wealth tree. The only 4 ways that will make you financially free forever. Download it here for free.